Hey everyone, welcome to another episode of With Flying Colors. I'm excited today to be here with Brian Lauer, NACUSO. You're the general counsel of NACUSO, and you're a
That's right.
partner of Messick Lauer and Smith.
That's right, yes. Yeah, the proverbial last name soup.
Yep, that's exactly right. So it's funny, as we were getting on here, I ran into you at the governmental affairs in March at the NACUSO meeting. I said, "Hey, we need to get you back on the podcast," and it took a couple months for me to get that invite out. And then I went back and looked, and it was 4 years ago. I've only been doing this about 4.5 years. You were in that
Time
first
flies,
six
right?
months. Yeah, time flies. I tell you what. And then looking at the notes from the last time we chatted, I first met you in 2013 when I had become the executive director. And that's when I realized how good of a communications plan you at NACUSO had with NCUA, because we ended up meeting with you and Debbie Matz, who was the chair at the time, talking about different things that you were hoping to get NCUA to realize could provide some legislative relief or regulatory relief and all that. And there were some things that came out of that, loans of all types being able to be made and different things. It's always about the long game. But here we are, 2013, 13 years later. And so let's chat a little bit about what's maybe happened in CUSOs over the last 4 years. Maybe that's a good place to start.
Yeah, sure. So 4 years, it's a lot of the same, but also a lot of change as the credit unions and the credit union industry looks the same at the same time. Lots of change. So just like the credit union industry, I think the CUSO industry has evolved even more into the financial technology space. I think that while the traditional CUSO model is absolutely still alive and well in the industry, there's still a lot of collaboration going on a lot around back office services and providing new and innovative services for credit unions and their members. But that has definitely moved more into the technology space, right? Credit unions looking to try and leverage not only their field of membership, but leverage their ability to grow through technology. So that's really been the big push of late.
And I think the current administration, and so Kyle Heltman just left, but he was very, and Rodney Hood, the two Republicans, the two last Republicans, were very pro fintech, pro let's not unnecessarily hamper credit unions from doing those type of things. And as far as the fintech side of things, we also talk a little bit about crypto and coin. I'm sure that what you're seeing is maybe some advances there. AI helping in loan decisions, or AI in general. Are those the kind of trends we're seeing in fintech, or am I missing the mark with those?
Almost. So those are absolutely, you're not missing the mark. Those are absolutely at the forefront, right? We can get into a little bit of what NACUSO is doing on the legislative side.
Yes, absolutely.
But, and certainly stablecoin affects that with the Genius Act coming out. And we could talk through that a little bit maybe. But in general, I think the technology side is really touching, Mark, every aspect of what credit unions are doing today. AI for sure, and how that touches everything that credit unions are doing today. But the technology side is happening on deposit growth. It's happening in the loan growth area. It's happening in marketing. It's happening at digital or cryptocurrency, like you said, fraud, cybersecurity. All of these areas are really being touched, or that are touching credit unions and important to credit unions. And CUSOs and the technology that they're investing in the form of CUSOs really is in all of those spaces at the moment.
And from 4 years ago, I'm going to guess there's probably 800 less credit unions, but there's probably more CUSOs. Is that an accurate statement?
I don't think there's a decrease in CUSOs. What's interesting, you mentioned the NCUA and they're very receptive to innovation and the like, but back probably around your time, I think we probably talked about this last time on the podcast, but we're not getting true numbers from the NCUA on the number of CUSOs. They're in that registry.
Yep.
And ever since CUSOs have been self-reporting into the registry back 2016 or something like that, we get a list. The latest list from the NCUA is from 2024. And there's not really a check on that data either to know whether they're double checking it, whether it's true. I can tell you that in my practice at Messick Lauer Smith, I've probably formed in the last 4 years, I'm probably forming somewhere between 30 and 40 CUSOs a year.
Wow.
Sir.
Yeah.
So it's growing for sure.
And the people who did that report in 2024 were probably part of the NCUA buyout because they're down 30%. So there's probably not going to be an update on that list for a little while, but
That's right.
30 to 40 a year as opposed to shrinking, that kind of tells you the importance CUSOs are playing in the everyday life of credit unions. You mentioned the legislative side, getting NCUA to change a regulation so that CUSOs can do A, B, and C is a little bit different than the legislative side, which means you have to go to Congress, which requires an act of Congress, right, to get relief there. So what's going on as far as your lobbying efforts in that front? What is it you're looking to do? What's the optimistic arc of that kind of thing being able to be achieved?
Yeah. Yeah. So it's interesting. Over the years, the CUSOs had minimal presence on the Hill. We were really more involved with NCUA, trying to make sure that CUSOs were getting the regulatory relief that we felt they needed. And in addition, making sure that CUSOs were being treated fairly by the NCUA in the examination process and the like. Prior to about 18 months to 24 months ago, NACUSO's main focus on the Hill would have been talking to members of Congress and their staff about NCUA's push for vendor authority, which you're all too aware of, I'm sure, as well. That was more of a defensive position, Mark, right? And I think you find this often with many of the trade associations being more defensive on the Hill of late rather than on the offensive. But NACUSO strategically has taken a position over the last, like I said, 18 to 24 months, where we've been on the Hill now 4 times. We'll be back in September on the Hill as our own organization. So not necessarily as part of GAC or some other fly-in for the industry. We're going on our own with a small group, and we are pushing on the offensive for getting changes to the Federal Credit Union Act to allow for federal credit unions to have additional investment power when it comes to CUSOs. Right now, federal credit unions, I have to say, the state charter are a little different. Federal credit unions right now are limited to investing up to 1% of their assets in the aggregate in CUSOs. If they make an investment in one CUSO, all the cash that they outlay into that CUSO takes away from their ability to invest potentially in another CUSO. This has become all the more important of an offensive approach because of AI and cryptocurrency. The amount of capital that's needed to invest in these kinds of technologies is just going to grow exponentially. We're not even sure how much capitalization a stablecoin, for instance, CUSO, is going to need in addition to its reserves, its dollar for dollar reserves. What kind of a capital infusion is going to be necessary there? Our credit union is going to be in a position where they have to choose between stablecoin or making an AI investment in a technology company or some other CUSO investment. So we're trying to eliminate that 1% cap so that credit unions can manage their investments on a balance sheet by balance sheet basis, right? If you're a particular board, you know this even better, right? There's a statutory constraint on capital, for instance, right? Where it's a math equation, but it's essentially you're in prompt corrective action as a credit union if you have less than 7% cap. But that doesn't mean that all credit unions will have 7% capital, right? I'm sure you encounter many credit unions that have 10, 15% capital, right? That's because they manage where they are comfortable as a credit union board on their capital level. And we feel that their CUSO investments should be managed in the same way without this cap, so that one credit union may want to make more investment and another credit union may not, and they have that ability. And through the examination process, the NCUA can make sure they're not taking on any additional risk.
Sure, yeah, that makes sense. A bright line limit doesn't work in every scenario. So what a principle based, like when they changed the commercial loan rule to say it has to be 80% LTV on loans. If not, you come in and get a waiver, and it has to be this. You can't make a loan to your member unless it's exactly these 10 provisions, to going to you write your policy and we'll tell you if that policy is safe and sound.
That's exactly right. It's a more principled approach rather than a prescriptive approach, which I know you know from the regulatory scope for sure. You don't want to be in a position where one size fits all. And the other thing that's interesting too, Mark, about the 1% cap, we went back and did research on it because it's way before my time. I'm going to guess it's before your time because it was in the 70s, right? It was in the 70s that this 1% was put into the Federal Credit Union Act. And there is no legislative history for any reason as to why 1% was chosen. There's no regulatory or legislative basis for the 1%. So it is truly an arbitrary number. So why are we working off of an arbitrary number? That's what we believe.
Yeah, and it could be benchmarked to inflation. It could be raised to pick a number X percent. It could in the states out there. I'm trying to remember. I want to say maybe is 5%
So
prevalent in some states, if I'm remembering.
it is, yeah. So there are some states that have 10%. Some states have 5%. Some have 2, some have 3. So it is all over. But the interesting thing about that too, that we're trying to make clear, is that while some states have a higher percentage, that's good for us because we can show that it's not creating additional risk to the balance. But on the other hand, about 20, or let's call it somewhere between 20 and 30 states, I don't have the number in front of me, are all following the NCUA. So if we are following the feds, so we're able to get this the Federal Credit Union Act changed, I think it will have a positive influence on a majority of the states out there as well that are following the federal rule.
Yeah, it's a pretty good story that you could probably go back and look at all those states that allow more than 1%. And has there ever been an NCUA loss tied to it? Has there ever been an IG audit that shows that it was a problem, right? Like the answer to both of those is no.
I think that's no too. We've FOIA'd for that kind of information. We don't get it, but
You're right.
but I agree with you. You would hear it in the news if that was a big issue. The only time year of CUSO losses in the news was going back to the financial crisis, and that was really more the CUSOs were supporting credit unions, putting commercial loans and mortgage loans on their books, and they were attributing those losses to CUSOs, even though they were credit union losses on their own.
Yeah, no, that makes sense. I was in a conversation in a previous podcast with Mike Bell, and he was talking about the sale of CUSOs, right? A credit union who has taken a CUSO as far as they think they can take it and being acquired by another credit union. He's seen some growth in that area. Is that something you're seeing as well?
Yeah, we are seeing some of that. It's not generally another credit union per se, but we are seeing scenarios where maybe a third party vendor it sees the value in bringing a particular service that a CUSO is providing in turn, or, in like a Jack Henry or something like that.
Yeah.
And look to buy a CUSO that is providing a service they feel it fits within their lanes. So we have seen that. We've also seen, you asked about the growth of CUSOs, and I was giving you my average numbers on the growth of CUSOs, but we have seen some consolidation of CUSOs too. Not a lot, but similar services being provided. Sometimes CUSOs were being formed collaboratively, regionally, with a geographic kind of scenario. We are seeing some mergers of regions. If you're doing commercial lending CUSO, for instance, in the Midwest, and you want to team up with somebody that's in the upper Midwest, there's been some consolidation in that way as well.
Yeah, no, that makes sense. The legislative side of things tied to the primarily serving credit union members, is that of equal or there's lesser importance to the 1%, or is that something you're also hitting? In a perfect world, if someone said, hey, you can rewrite the Federal Credit Union Act today and we'll approve it, I'm assuming that would be in there too?
That would absolutely be in there. And the interesting thing about that, not to be too wonkish here, but the way the act is written today primarily serves as not in the investment. It's not a limitation in the investment powers.
Okay.
It's only a limitation in the lending powers to CUSOs. The NCUA, when it wrote the regulations for the first time back in the 90s for CUSOs, I think they had an earlier version, but the most robust sort of modern version was in the 90s. And when they wrote that reg, they conflated the investment and loan together and made them have to primarily serve under investments and loans, right? That's how the reg was crafted. So what our position on that from a legislative perspective is, the investment powers have always not had a limitation of primarily serving. That should not be a limitation to lending as well, instead of going the opposite direction. And I don't see why that, from a legislative perspective, has a lot of basis in policy reasons or safety and soundness reasons for the federal credit unions to be able to not invest in a company that is serving the credit union industry. So you want it to be as part of the routine operation of credit unions. That's an important piece, right? You don't want credit unions to be investing in McDonald's franchises or something of that sort, right? They want to invest in financial services, and that's still the focus. But by limiting it to primarily serves, you are limiting a credit union's ability to have that strategic investment, that seat at the table with some of these credit unions, with some of these companies, because if you say to them, here's my money, I want to sit at the table, I want to be a part of your growth, I want to be a part of your future, but oh, by the way, you have 50% of your business has to be with credit unions. The company typically is the one then turning away, right? It's really putting credit unions at a disadvantage in that context.
Yeah, it hurts the value of the federal or state charter in that instance, and so it almost sounds like half the fix could be NCUA fixing their regulation, and the other half would be legislative, which maybe when John Cruz comes in, that can be new board members come in, they're always looking for a way to influence things, right?
Yeah.
Because that's what they're there to do. And he's going to be likely in the ilk of deregulation.
We will
Listen,
absolutely,
you're going to be meeting with them this fall, probably.
yes, we will absolutely be visiting with the new chairman. We're going to give him a little time to get his feet on the
Sure.
ground, I think,
Yeah.
before we jump in his office. But absolutely, it's an important and as being the executive director, the board members, when they come in, aren't always the most attuned to credit union issues. They certainly have the expertise to sit in that position and sit in that role, but they don't necessarily know the operations of credit unions and really the weeds of the kinds of things you and I are talking about.
Yeah.
So I do think this is an opportunity for us to educate Chairman Cruz and talk to him about this difference in the act I just described for you, but maybe some other things within the CUSO rule as well. One of the things that NACUSO focuses on for sure is modernization of that rule, right? The rule, while it's been tweaked here and there on the margins over the years, is essentially a rule from the 90s, right? Almost pre-internet. So we really do want to try and focus on the rising role of CUSOs in the industry, the complexity of CUSOs in the industry, and how that rule should fit those changes.
And I can tell you, having sat at the executive director's office is right across from where the board members are, and whether it's NACUSO or CUNA at the time, now America's Credit Unions, the meetings would happen, and before the end of the day, they'd be over in my office saying, "Hey, NACUSO is in suggesting we do A, B, and C," right? And and that's how things get changed, is by those that are impacted by regulations showing up and say, "Hey, have you thought about doing it this way?" And for all the different, and they'll go out and speak and they'll hear different things. But it's when a board member really wants to champion something and staff looks at it and going, "Yeah, you know what? We can put a ring fence around this and we can do it." Or, "No, we can't because our interpretation is the act says X. And because of X, we need to drag that into the regulation." But without the associations and the interested parties going in and talking to the board, it usually is status quo, because the staff aren't there looking to say, okay, how can we change regulations to make deregulate or regulate? It's really driven by the political appointees who come in and say, how can we make this better? And over time, it works, right? So that's back to the long game.
It has to be a long game.
That's right. And I remember when I was executive director, there were things policy-wise internally that I would want to get done, and you'd have to wait for the right combination of board members to do it. And John Cutchy and myself, we would have certain things in a box ready to go until the temperature was right. And when the temperature was right and you thought you might be able to get 2 votes, because now you only need 1 vote, but you get 2 votes, you'd be ready to run. So you didn't have to go research it for 6-9 months. And then by the time they were onto something else by then. So it's, to me, sitting where I sit now, understanding the roles that your organizations and organization like you play, it's supremely important to the greater good of credit unions.
Absolutely. Absolutely. And we've been talking internally. I'm sure you have some real insight into this as well. And it's probably for a subject of another one of your podcasts that I haven't seen or heard yet. But the concept of the NCUA board is going to be completely different in my mind moving forward. And how is that going to affect this process? Right?
Yeah. Sometimes I'll say I worked for 5 chairpersons in 8 years, which I think at the time was a record because of all the ins and outs. And they come in and they truly want to make a positive impact. So they're excited about doing things. But my line was, today purple is purple and yellow is yellow. Tomorrow yellow is purple and purple is yellow. And that can get a little chaotic. So when you have a situation where the terms don't mean anything, or they mean less, maybe they don't mean anything, but if we go to democratic rule, assuming Harper and Oates don't come back, and that the law is that the terms, they can be terminated for any reason, they'll probably wipe them out when they come in with a new Democrat. Consumer compliance is going to get elevated, and other things are going to happen. So that the pendulum was hard before, but it's going to get harder for everybody now. It's just going to swing quicker with more velocity.
More velocity, and I think with less compromise.
You're right.
Because the way things are moving now, I think things will get tested a bit, but still more as we move forward. But I can see a presidential administration coming in and saying, I'm just going to appoint 2 members, 1 seat empty.
Yeah.
And then that leaves no compromise, right?
Yeah. And I was there when 2 Ds didn't get along and 2 Rs didn't get along, but it makes it a lot better if you're an R and you only have 2 Rs and no D. It makes it easier to get things through. Doesn't mean it makes it better. It doesn't mean that because you lose that wisdom of crowds. But yeah, it's kind of a Wild West on how this is all going to play out for sure.
It really is, yeah.
Yeah. So you mentioned the Genius Act too. Your take on what's going on in that arena as it relates to CUSOs, et cetera.
Yeah, for one, I think it's really a win for NACUSO and for credit unions that CUSOs are actually mentioned by name in the act. Going for these hikes on Capitol Hill, you would not be surprised how many congressional staffers don't know what a CUSO is to begin with. So that education is part of our process, but it is pretty great that the Genius Act does have CUSOs written into the bill, and the idea being that a bank or a credit union will not issue themselves a stablecoin. So they're going to be issued through, in the case of credit unions, they'll be issued through a CUSO. So I think that's really, I think that's a win for the CUSO, having CUSOs be part of that legislative action. How it's going to work in the all thing, your guess is still as good as mine, Mark. What I think is that the only real way it's going to work in the credit union space is, first, let me say, I do think it will be important for the industry for credit unions to have a credit union stablecoin. I think that concept, just that statement alone, is important because it is going to be important for credit unions to not be left out of this side of financial services. It's going to be an important part of payments and the like moving forward, that it being stablecoin. So I think credit unions need to have a stablecoin that is for their industry. Think about it like shared branching, right? Credit unions need shared branching. They needed it a great deal in the past. Now they're going to need shared stablecoin, I believe. Now, I do think that the only way that will work is through collaboration. You really do truly need a group of credit unions. And when I say group, more than 100, probably even more than that, probably closer to 1,000. Think of the way shared branching really works. You're going to need that kind of a collaboration. Credit unions, while collaborative, can be like herding cats as well. So I hope it can work. There's a little bit of hope in my voice there, but I really do think that is the future of stablecoin.
There's a line or a joke that was, I don't understand it, and I don't understand the people who understand it, right? And that was my mantra on crypto and stablecoin. But I will say, to Kyle Heltman's credit, he helped me understand something at that same meeting where we last met. He gave a speech and he was talking about stablecoin, and he made a reference. One of the themes of what he said was that if stablecoin can help the dollar remain the world currency, that is something we should try and assist and be part of, right? And that was the light bulb. That one sentence and that whole thing, it was probably 2 minutes of his speech, but I thought, that makes sense. I'm not sure it works for everybody, and I'm not sure it works for me, but being the world currency is a really good thing. And if other countries are allowing stablecoin and the United States is more restricted, it's like the debate right now on AI and what you ring fence. And if China's and the other countries are developing it and don't have all these regulatory requirements around it, and they become the leaders as opposed to the US, that's not a good thing. Just Silicon Valley is where tech happens for the world, right? AI happening in the US and stablecoin happening in the US. So that world currency thing was really a tipping point for me. I think I get some of this now.
Yeah. It's going to be important. The guess is as good as mine comment earlier is that that's not clear to me how quickly it's going to take off. As for as many, we can talk theoretically about stablecoin. I'm just not sure there are that many average people that are going to need or want to be involved in it.
Sure.
Moving forward. So I think it will be slower than we think in adoption, but I do think the payment side of it is really important.
Yeah. Yep. No, it makes perfect sense. Brian, I got through the list of things I was wanting to chat with you about today. This has been a lot of fun. If there was one thing I didn't ask you that you wanted to talk about, maybe conferences. Are there conferences coming up or anything else before we wrap, that you want to chat about?
Yeah. Oh, that's a great question. So NACUSO has its annual conference. We had it in Orlando back in April. We're going to have it in Las Vegas this coming year in 26 in April again. So I definitely would recommend everybody come see that. There's also the Venture Tech. They don't call it a conference, they call it an event. But the Venture Tech event, if you're a credit union that's interested in technology, it's a conference set up just for credit unions to get introduced to technology and the like. So that's another really great one to look for. We'll be at both of those. I'd be happy to meet anybody there that wants to meet with me, or you can feel free to reach out to me. My email and phone number are on our website at www.CUSOLAW.com.
CUSOlaw.com, and you're on LinkedIn as well. Is that a way that people can get in touch with you? Very good.
Yes, absolutely.
It's been great catching up. Got to spend a little bit more time with you here than I was at the NACUSO and the running around at GIC. As always, I learned a few things, and Brian, I want to thank you for your time today.
Yeah, absolutely. It was my pleasure, Mark.
You got it. And listeners, watchers, I hope you do the same again soon. This is Mark Treichel signing off with flying colors.